Okay, good morning. It's always a challenge to follow Deborah, so I'm going to do my best to talk about how many Canadian airports are here in the audience. Okay, quite a few. Great. So I'm going to do my best to represent what we see has been going on in the industry for the Canadian airports. I did not do the deep dive that Deb did into some of the ancillary revenue issues with the airports and the airlines in Canada, but certainly something that we will definitely take a look at given some of our clients up there. So let me start by taking a look at how Canada has responded in terms of the worldwide economic recession. And we see that after 9/11, if you take a look at that red line, that's the Canada GDP index compared to the blue bars, which represent the worldwide. And what we see is that after 9/11, Canada did not fare as bad as the rest of the world in terms of a GDP drop. But in the most recent recession, we've seen a little bit more of a deeper drop for Canada relative to the rest of the world, setting a stage for the fact that we think that the recession has hit a little later there than it did in the States and is taking a little longer to recover. However, given the fact that there are far fewer airlines in Canada than there used to be, and now that Air Canada and Canadian Pacific have merged, and that's certainly old news, but WestJet is coming back up, what we see is that while there have been declining operating margins, that two of the three carriers are still in very good shape, and I would argue that Air Canada is too because of its international growth. But we see that there have been lower margins for Air Canada, Jazz, and WestJet. Porter's not represented here because it's still relatively new. As Deb said, with the maturation, or what we thought was the maturation of the U.S. industry and the European LCC industry at about 30%, what we're wondering is if that's really sustainable or if we'll see more low-cost carrier service in Canada and start to break that one-third barrier, that 30% barrier, and I would argue that yes, that given WestJet's plans and Air Canada's plans for increased transborder, that we would expect to see more low-cost carrier service and that number come up from 30% and to actually increase. One of the things that's interesting in looking at the Canadian market and comparing it to the U.S. market, which is something that we do just because we do look at the U.S. market so much, is that WestJet's got a higher load factor than Air Canada does. And this is actually the opposite situation and the opposite phenomenon than what we see in the States, which is that the network carriers have the higher load factors because of the dramatic capacity cuts, and the low-cost carriers have lower load factors. So we're seeing an exact opposite phenomenon in Canada, which I find very interesting. The Canadian carriers continue to gain market share in the transborder market, and what we're seeing is that because of WestJet's growth, I would say primarily, that we're seeing the Canadian carriers back at the pre-9/11 levels in terms of transborder traffic, where they're at about 44%. And what we're wondering is if that continues to increase, and taking a look at how much WestJet carries of the Canadian-U.S. traffic. They are the carrier that's got the highest load factors, and so far it looks like the carrier with the most potential for increase and the most plans for increase. Taking a look again at Porter, which is relatively new, I think that 38% is really just representative of the Boston and New York markets when we pulled this information. But what you can see is that WestJet is clearly the leader in terms of load factors coming across the border. What I want to show you here is just, and we'll get into airports in a minute, but just to set the stage for the industry, is you take a look at the diamonds represent the annual growth of the, wait a minute. Yeah, no, this is traffic growth and volume from Canada. So what we're looking at is the bars is the traffic and the diamonds are the growth. So what you can see is that the highest growth, no surprise here, are in the smallest markets. And we're seeing that worldwide. No surprise that the biggest market growth is coming in markets like in Asia, Latin America, and the Middle East. So how has this affected the airports in Canada? And I'd be interested, obviously, to hear from those of you representing Canadian airports at the end to understand this from your perspective. But we've seen great growth in Canadian markets, I think 8%, and anybody here would be thrilled to have 8% going forward. There's been a little bit of a decline, 08 to 09, and we expect to see a little bit more in 10, but then hopefully we'll see things start to come back up given the growth rate of WestJet and Air Canada and with what's going on with Porter. I'm not moving. Again, 2009, not a great story. This is looking at percent change in plane passengers by world region, and what we can see is that there was huge growth in Asia and the Middle East. Again, no surprise, or I should say China specifically, and the Middle East, whereas Europe, Canada, and the United States had about the same decline in traffic overall. I think that to compare ourselves to China and the Middle East is probably unrealistic, but because that's where we're seeing all of the, and you can see where all of the growth is. So Canada is expected, or is already recovering at about the same rate as Mexico, a little bit faster than the United States. There's capacity has come back in terms of capacity and in plane passengers, but again, nothing close to what we're seeing in the Middle East, China, and Asia. This is just for those of us who are very U.S. focused, and I just want to orient everybody to the fact that we've got these 10 Canadian airports that represent 80% of the traffic in Canada, and because of the geographic diversity of the country and the fact that the population is very spread out, you don't have the traditional as concentrated a hub and spoke system as we do in the States. So what we see is a lot of focus in Toronto in terms of weekly seats, and then a number of other airports. Again, these 10 airports are making up 80% of the Canadian traffic, and Toronto dominating by far. The Canadian market, the domestic Canadian market, represents about 2/3 of the capacity offered, and I actually expected that the Transborder number would be bigger. I do expect to see that increase, and where we see the growth, again, is in the smaller shaded areas of the U.S. Transborder, Latin America, Asia, and a little bit in the transatlantic. Interestingly, and we'll look at this in a minute, we think that a lot of that growth opportunity, with the exception of Latin America, may be with the non-Canadian carriers because of the Star Alliance. We're actually seeing that they're providing a lot of the increase in the capacity for international. Toronto Island, the Toronto City Airport, a small airport in the close to the city in Toronto, is seen a huge increase, but like a lot of slides that show bar charts like this, it's off a very, very small base. So we're watching it. We're watching Porter, as I'm sure everybody is. And I know that at Roots last week in Vancouver, for those of you who were there, it was a popular topic for folks who are looking at increased service transborder and domestically within Canada. So what we're seeing is that there is good growth expected to continue in the top Canadian airports. We've seen good growth, and we expect to see more going forward. International sectors are the fastest growing markets for Canadian airports. This is reflective of North America in general, and to what Deb talked about earlier. What the carriers have figured out is that international, especially the network carriers, have figured out that the money that they can make better than domestic is in, that was a silly statement, but they can make more money in international. And in talking to a representative of AirTran pre-announcement, he said, you know, it was interesting, we sort of backed off of the international focus, and then as the economy went into a recession, we realized we really needed to spend a lot more time looking at international because of the potential and because of the yields that we were getting on those markets. So back to the point that I made earlier, if you take a look at who's been providing the international capacity out of Asia and out of Europe, it's been non-Canadian flag carriers, which I find interesting. And again, I think that what we see is the strength of the alliance and the Star Alliance, where Air Canada is a major player coming into play here, whereas Air Canada is providing more capacity into Latin America than the non-Canadian carriers. So we think that there's a very good outlook and growth potential for all of the Canadian airports, that it's a market that is still got plenty of room to grow, that the worldwide economic conditions will continue to improve. Whether it's a W or a U, as Deborah said, is yet to be seen, and how Canada reacts, we would expect to follow basically worldwide GDP in order to mirror it and get closer to what the worldwide GDP is, rather than to experience the dip that it's seen in this last recession. But we do see healthy balance sheets of the Canadian carriers, which is very encouraging, and that the domestic carriers are in a growth mode, that there are opportunities in long haul, and that the Transborder LCC seats continue to increase. So we'll look forward to any conversation about Canadian markets and our and the potential that you all see, because I'd like to understand a little bit more of how you see the opportunities shaping up in Canada. Thank you.